Hey guys, it's 2 p.m. Monday afternoon. I'm really bored, so I thought I'd share my boredom with you guys and create a video. So I just turned the charts on and I wanted to have a look at what was going on in the markets right now. Um, it's public holiday in New Zealand, so volumes will be slightly lower than usual, and can kind of see it with the Euro JPY right now. I don't know if any of the other countries are in public holiday or not. I haven't checked the news, but I just quickly opened up my charts to see what's going on now. There's a couple of things in here that has happened that I wanted to share with you. I'm going to get rid of these lines first. And notice also how you've got flag formations over the last few days, in actual fact, not taking into account the weekend. So notice here, this I believe was Thursday or Friday, um, the flag formation that happened. There is a way you can trade this. I don't want to make it too complicated now, so some other time there will be a video on this. But what I wanted to talk to you about here was market behavior. I'm not sure if any of you have taken the time out to analyze each session, whether it be the Asian, London, or New York one. A lot of people also don't know the relationship between the three sessions and how the behavior of prices in one session will affect the behavior of prices in another session. Now, I wanted to show this to you right now, bits and pieces of it, and also explain a little bit about how the market makers play a role in this. Okay, I also want to share with you another little strategy. What that will do is possibly give you another opportunity once every week, and this would be at the market open. So, for those of you in the Northern Hemisphere that get to see the market open on your Sunday afternoons, chances are you might be able to trade and win your first trade every Sunday. Uh, Again, this tends to happen more often than not. I'm going to share that with you in a second. First off, I want to show you this. I'm not sure if many of you have noticed, but what you find with market open on Monday morning with the open of the New Zealand session is that there is always like this price difference. Okay, I want you to take good clear note of that, because you're going to start trading that from next week. Start off demoing this, and then um, once you've got the hang of it, you can start trading live on that. I will explain to you a little later what this is and how to trade this. Okay, but first I'm going to draw this line back in. I want to show you how to be able to draw these lines in and then start analyzing what the different sessions do. So what I've done, I jump onto my hourly chart, and then I will count back the number of hours. So I've counted back from 2 p.m. right now, drew in the very start of the Asian session here, counted back 8 hours, drew in at the start of the New York, same with the London, same with the previous um, Asian session, and then going back again to the previous New York session. And then I've also drawn in another line. This is the whole week. So this is the start of last week. Okay, because again, I'm going to show you guys a little bit about how to trade this additional strategy that I'm about to share. Now, what you're seeing here is individual sessions. Okay, um, take a good note of what you see happening in those sessions. Notice how here, to me, it looks like for the last couple of hours, the Asian session is trending up. Here, the first couple of hours of the New York session, where it market came down and then kind of just went sideways for a little while. See this London session, generally this was trending up. This Asian session here came down briefly, skyrocketed. This could be market maker behavior. Uh, could possibly be anything. I'd say there was a lot of long orders that hit the market. Uh, This then would be the previous New York session. I believe that would have been on Thursday. Okay. What I generally do, once I've drawn these lines in, I'll jump on to my 15-minute chart to have a closer look at what's going on. Okay, so let's pay some attention to the present Asian session. Bollinger Bands that I've got here, there is the settings on that are 20 and standard deviation of 3. I believe that's still the same. I haven't changed that. Again, pay attention to the closeness or the distance between the upper and the lower Bollinger Bands. It'll give you an indication of volume. For me, when they start constricted consolidating like this, it means the volume is low. In this case, this makes sense because this was the end of the New York session, so volume started to drop anyway. Not too many people are trading. The last few hours of any session, mind you, I think the professional institutional traders, you won't have too many of them trading any session after lunch. And so I enjoy letting them do whatever they're doing before lunch, because then after lunch it becomes more predictable for me. Okay, so let's just grab the Asian session today for the time being. What I like to do is grab my horizontal lines and start drawing in the lines. This is the lowest point that I could find initially, and this is the highest point that I could find initially. This is today during the day, okay? And this is what I want to show you. What you will generally find is that when the market opens, there'll be a slight correction of what happened previously. And in this case, this is what happened on Friday afternoon, New York time. Market opens, market corrected itself, established a low, and then went up and then tried to establish itself as a high. And for the time being, you could have considered that to be its daily high, daily low. What you would generally find is that the market will quickly establish its generalized form of the daily highs or daily lows, but it will choose one to be like its base. And then what you're going to find is that the market will come back initially to test your daily highs and your daily lows, and then it will go and head out into a specific direction. Okay, and you could pretty much bank on that over the extended period of time it will continue heading in that direction. So in this case, it came and established its daily low here, it tried to establish its daily high here, market did pull back initially, and then so this would be the first few hours that I'm paying attention to. Okay, notice how here it came back, it tried to retouch its daily low, couldn't quite get there, and so what I will start to think here is that there's the potentiality of market establishing this daily low as its base, and it's going to head back up again. Okay, and that's generally what it's doing for the next how many hours? A few more hours. It possibly will revert down and then keep slightly heading up or just going sideways. But over the longer term, over the course of the session, what you're going to find is generally that the market has trended up. Even though it's tiny, it has trended up. This is also the market consolidating. Okay, and what I mean by this is consolidating over the period of 3 sessions. Um, and this is the consolidation phase of the 3 sessions, okay? But for the session itself, the market has trended up. Now, when you can start to see that, you can start to then create strategies or even apply your strategies using this knowledge in order to get the winning trades. Let's have a look at the New York session, for example, last Friday. So what happened here was the market started, and then the market set to establish its daily high for the session. It did here, and then it started to go down. Market started to go down. Now what we're looking at here is to see how far this would have possibly gone down. It went and established its daily low for the session down here, and then the market started to then climb up after a while. So what happens is you would see like a slight trend happening in that direction for the rest of the day. That's what the market does. So what you're waiting for, and if you want to apply this strategy, you can possibly avoid trading for the first few hours of any session. Wait and watch for the market to establish its daily highs and daily lows, and then you can know that the market is going to trend in the opposing direction for the duration of the session. And by now, generally, once you've avoided the first few hours, by now, the all the news releases that were meant to happen have completed itself. Okay. The other thing to note is this: previous sessions can give you an indication of what's going to happen in the present session. So, for example, if the market went up, established its daily high, came down, established the daily low, and then started to trend up, well, there's every chance that the next session is going to do exactly the same thing. So at some point, you're looking at it hitting a daily high. At some point, you're looking at it hitting a daily low. And more often than not, if it's trended up, this one is possibly going to trend up as well. For a lot of people, they would generally pay attention to what's going on during the Asian session, because that may give you an indication of what's going to happen in both the London and New York sessions overall. Okay, so I possibly wouldn't pay too much attention to that on a Monday and a Friday, that advice, because anything can happen on a Monday and Friday. Too many corrections happening, generally speaking. And whatever advice I'm giving here and now is in relation to binary options. So it does apply to Forex as well, but on a different time frame, and we're generally looking at different things as well. Okay, let's go back to the London session now on Friday. Notice how here we can draw in lines. Okay, let me get rid of some of these lines. Um, I like to click my lines and then go into charts. I don't know, it's a habit. It just feels like I'm doing something. Um, when you get to my stage where you don't actually have a day job, you get pretty bored with doing nothing. So it just kind of makes me feel like I'm doing something. Makes me feel important. Okay, so what I'll do, I'll get my horizontal lines initially, um, draw in, possibly say, consider this to be somewhat of a high here, and then see where the low was. We can draw it in around here now. So the market's gone up, it's established its daily high, came back, hit its daily low, and then it starts the trend. Okay, so when you start to notice that this is what happens. Mind you, when I'm talking about daily highs and lows, I'm just talking about the first few hours of the session. So, as you would see here, where the market did break it and just keep going, what I'm suggesting here is that you know that for the duration of that session, chances are the market is just going to continue to trend up. You're going to have moments when there's price is going to revert, but the trend will most likely continue either close to or up to the next session. So it's here, market hit its high, hit its low, and then just started to trend. Here, market hit its daily high, it came back down, and then started to trend. Here, market went and established its daily low, its high here, and then started to trend. That's what you're looking for. If you can see that, and you can also see the market trending in a particular angle, then chances are that for the duration or the remaining time of that session, market will continue to trend in that way. Okay, again, I'll be wary of what happens on a Friday. More often than not, on Fridays, you're going to find markets going south. Um, but on every other day, like Tuesdays to Thursdays, these rules tend to apply. Um, why this is usually, and you can use this for forex as well, for those of you that do trade forex, where you know if you can pick where the market's going to most likely trend towards. Well, hey, you can purchase your orders and sit and wait and watch and let the markets do its thing for a set period of time. Okay, going back into Asian session on Friday. Market really didn't do much initially, but you could take this as its daily high in the first few hours, and then down here. So it kept on going down south for a number of hours, and then when this spike happened, you kind of generally set the scene for the remaining of the London session and also the US session. Trend up entirely, fall, and then trend up, and then trend up in the Asian session. So again, I'm not saying for you guys to go in and start doing all sorts of crazy trades, doing long term, uh, long term call trades or long term um, put trades just based off this. But what I would like you guys to do is start drawing some of these lines in and analyze what you see the markets are doing. This is kind of just like behavioral patterns. Generally speaking, it is part of like market maker behavior where this is how they'll control the markets. They will try and establish its boundaries and then just let the market trend for a little while. Trending will go for a number of hours. Know that it's in most cases, what I do find is once the market starts trending, it most likely will trend for the remaining of that session. So don't try and seek reversals, major reversals on that particular trend, because chances are it's going to just continue its way up for a number of hours. Okay, now let's go back to, where's the other line here? Let's go back to the strategy that I was talking about. So I'll get rid of this line. What generally happens is wherever the market closes on a Friday afternoon with the New York session, the markets are going to open somewhere on with the New Zealand Wellington market on a Monday or on a Sunday for those of you in the northern hemisphere. What you're going to find is if the market opens high or above this point, then you could reasonably consider taking a put for the remaining of that 15 minutes, because the market will head back down. So if the market opens up here, hey, quickly execute a put trade for the remaining of the 15 minutes, because the market will try and correct itself, come somewhere close to it. Didn't come close enough, but somewhere close to this. Let's move back to, where is it? Or was it this one? Let me just have a look to see where the previous week was. And then drew that line in this one here. This is an interesting and extremely simple strategy if you wanted to follow it. What it will do is it's just a simple correction that tends to happen. Why is this line still there? It's just a simple correction that tends to happen once a week. So for a lot of people, it's an easy trade to take. Okay, so we go back onto the 15-minute chart. Let me zoom out to see where that line is that I dropped. Okay, I'm going to have to move back again. Okay, here it is. Now I'm going to get rid of this line as well so I can show you. Okay, so this is what happens. This was the Friday. Markets closed low, and then when the market opened, it opened below this closing point. Notice how in this 15 minutes, this was a green candle. Market went up again. So here's what you can practice trading on market open. So this has to be in the first 15 minutes of the trade, of the market opening on a Monday for wherever you guys are. So wherever Wellington, New Zealand opens, have a good look to see where market closed off on Friday, and when you look at where the market opens, so if it's below, if the market opens below this point, well, put in for a call for the remaining of that 15 minutes. If the market opens above, then put in for a put for the remaining of that 15 minutes. Okay, so guys, why don't you just demo this over the next say, or if you want to back test, certainly go back and see how many of these actually happen that way. Uh, but certainly demo this for the next month and see how you go. So again, see here, market closed off here. When it opened high. I would just generally do a put for 15 minutes. And mind you, I haven't traded these in a long time, but this is just a simple strategy you can utilize if you wanted to. And that's one trade done and dusted every week. Okay, so try it, and please do let me know how you guys go with this. Cheers.